This is Mastering Your Wealth with David Gagnon, the podcast.
I know that we have seen interest rates that fluctuated here and there, and so do rates on annuities when this happens, by the way, because they are not as high as they were last year. So the question is, should you buy an annuity in 2025? Are there other options? How do we figure this out? What are some instances where an annuity may be a good choice for guaranteed income, David?
You should never make your investment decisions on where you want to put your money, whether it's in stocks, bonds, mutual funds, annuities, or any type of an investment until you have a plan that's really designed with what you want to accomplish for the rest of your life, going into the future, into your retirement, while you're in your working years. Because if you do a plan, what's nice about that plan, by looking into the future with setting your goals of what you want to live on, spend on, adjusted for inflation and taxes, we can see what you need to make decisions on today on as far as how much you need to save, what your rate of return needs to be, how to be tax efficient by putting your money in the right tax buckets or tax types. And when we look into the future with what people are presently doing, we can see what problems might lie ahead. And then the details from that analysis will identify if, in fact, an annuity is a good fit. Because if we see that you're going to run out of income, well, maybe an annuity might be a part of your overall plan to fill that need and that gap. And investment choices and our recommendations are always going to be an afterthought after we put this comprehensive analysis together, because I quite frankly wouldn't know where to advise somebody to invest their money, right? It's like going to the doctor, and the doctor's not even going to ask you any questions, but they're going to prescribe you all kinds of medications or an operation without even knowing anything about you. I mean, that's kind of what a lot of people do with their investment decisions. They invest first and then they hope for the best later because they have no plan to back it up. So many of the calls that we get from listeners are people that have just newly retired and might have been in retirement for a few years, and they're starting to spend money instead of make money. And so what is scary about that situation is when you no longer go to an employer who's going to give you a paycheck every month, now you got to figure out, all right, from your resources, what are your best decisions to optimize all your resources that you have to draw an income from. And what I do find quite a bit are people are not putting together a strategic income plan design, and their investments aren't invested appropriately to create that. And so we had a couple that came in a few months ago, and they had been retired for a while, and what happened to them was they were still drawing from a growth type portfolio, which in their accumulation years worked fine, but it wasn't generating enough income or yield to support their monthly needs. And what was happening is they were selling off shares over time because the growth of the portfolio was actually going down. The values were dropping and some market fluctuation. And that's a quick way to derail your retirement if that keeps happening over and over again, because you have to sell off shares. And you're selling shares from your investment plan, and if it's in a down market, you're selling off more shares to pay you that paycheck that you need each month, which means when the market recovers, you don't have as many shares there to recoup what you may have lost or distributed to your bank account. And so you have to find a way, by using the right investment tools and high yield interest paying tools, that allow you to keep your principal intact and have the ability to have some of that money, which won't be needed for income because the yields are so much better in how we design a strategic income plan, to start planning long-term future objectives, whether it's for offsetting inflation, maybe some tax planning, maybe some out-of-pocket health care. So when we worked with this couple a few months back, we restructured their plan design and really put together a personalized strategic income plan that solved the risk problem where they were depleting money. We showed them how to create yield, how to preserve their principal that was creating that yield, and then that left over a good portion of their investment plan to really align with other planning objectives that we were planning for long term. And once you go through this exercise with us, you get a lot of clarity as to what's working, what isn't, and then a lot of education on how we do things differently and how we implement the strategies and the right tools and that create the right benefits and solutions so that your plan has a much higher level of success with a lot more control and flexibility. And now you don't have to do any guesswork on whether you're putting your money in the right places or not, because we validate everything when we're done with the analysis before and after.
Yeah, and I think exactly you hit the nail on the head just a few moments ago, putting together a strategic income plan, right? Looking at all the different resources that you can draw income from in retirement and going through this exercise that you talk about. Is this where somebody comes in and goes, hey, I have a plan in place. Can I get another set of eyes? Or I have nothing in place. Help me create an income. Paint out what this exercise is. What should our listeners be calling and saying, hey, David, help me with my income? How can you help them?
Well, I always want to have that conversation first, just to kind of get to know what the problems might be that they're struggling with, what is good that's happening with their financial planning or decisions, and then we do a complete comprehensive forecast analysis. Or my paraplanner Frank will put together all your data, look into the future with what you want to happen with your money, and see if in fact it can happen. And then now we can identify where the weak links are, or the dots that aren't connected correctly with your finances. How do we fix what isn't working so well? And it's a good exercise to go through if you want to reduce your financial anxiety and the guesswork that a lot of people take in trying to figure things out on their own and make costly mistakes. Or maybe their investment advisor or insurance agent aren't the right fit at that point in their life to really do strategic planning, because their focus is really just to sell you and manage their investment portfolio or their annuities or life insurance. Because if they're only focused on that, other things are suffering in your blind spot, and it's costing you money if you're making poor mistakes on your Social Security claiming. Maybe you have pension decisions you have to make, lack of a tax plan strategy, and lack of a backup healthcare strategy in an estate plan. There's a lot of different areas that you need to make other decisions on that could be costing you money, but you don't make them because nobody's helping you in that area. So you can see there's a lot of moving parts in a real plan. And if you're looking for a better way to get better control over the outcome and have a high level of success, let us do the comprehensive forecast analysis and put you in a better position of identifying the options that might be best suited for you.
And again, a great exercise here to reduce that financial anxiety and, of course, that guesswork. I'm talking about this comprehensive forecast analysis. By the way, guys, no cost, no obligation to our radio listeners. If you already have a plan in place, great. Let's see if we can make it better. If you have nothing in place, fantastic. Let's start building you from the foundation up. 203-872-0009. 203-872-0009. The website, of course, masteringyourwealthradio.com. I ran across an interesting article here from Yahoo Life. It addressed condiments that can make you sick if they are past their expiration date. Some of these are not going to surprise you, of course. Mayonnaise, right? It contains raw eggs. That obviously bad combination there. Creamy salad dressing can easily spoil once open. And then you have pickles and brine. If you have that, watch out for cloudiness. And it got me thinking, just as much as things, go expired in the refrigerator and whatnot, there's got to be some expired strategies when it comes to a retirement plan. David, can you give me some examples of that?
Well, first of all, I can relate to the pickles and brine and getting you sick, because a few years back I got a bucket of pickles that were made by the local deli, and they were homemade. I love pickles. Well, sure enough, I got food poisoning after I opened that up, and it was bad. It was bad.
Yikes.
But yeah, so any case, yeah, in your planning areas, I mean, you have to look at some things that are kind of cookie cutter pieces of advice that doesn't work out so well for a lot of folks. And one of those areas is the 4% rule. If you look at some of the information that's been out there for a long time, and what that's really referring to is if you are going to retire, if you want to try to make your money last throughout your retirement years, plan on only distributing 4% of the value of your nest egg. Well, that doesn't work out so well if you haven't saved a lot of money, right? And, everybody's 4% amount's going to be different. And what's going to happen is it's going to force you into living the lifestyle spending that could only be at that level of spending. So if you get to retirement and you have $1 million, right? If you can pull off 4% or $40,000 a year, and if you're taking Social Security, if that's more than sufficient to keep you happy with your spending needs and do the things you want in retirement and be able to afford it, that might work out okay. But what if you've only saved maybe $500,000 and now you retire. That 4% is now $20,000 a year. And if you add that to your Social Security, maybe that's not going to cut it, which means you're going to have to take a higher distribution rate or find another way to make your money work harder so you can get more income and minimize the risk of running out. So, that is so cookie cutter. I'm not a fan of any of the cookie cutter things that are out there. We always personalize and do strategic planning, but it's something that people are hearing all the time. Unfortunately, it's going to work out for some and not for others. And you don't want to figure this out when you actually retire and you kind of were relying on that 4% distribution rate, and it's not going to work. A lot of people think they have a specific dollar amount that they can retire on, but one of the things that they forget about is inflation. Inflation is a big factor that you have to look at long term to see if what you're doing with your money is going to work out okay and how long you're going to live. You're going to only live, in your mind, only 10 years in retirement. It's a big difference in your financial decisions compared to somebody that might live 25, 35 years in retirement. And so there's a lot of variables that people have to really take into account.
For more details or to sit down with David for your complimentary financial GPS, visit masteringyourwealthradio.com.
Any comments regarding safe and secure products and guaranteed income streams refer only to fixed insurance products. They do not refer in any way to securities or investment advisory products. Fixed insurance and annuity product guarantees are subject to the claims paying ability of the issuing company and are not offered by Brookstone.